Hi, this is Arnachalam. Today, let us move to a new topic of breakout mantra, how to trade in breakouts and certain patterns. Firstly, let's discuss about what is breakout. When the market breaks a particular price range with a huge or decent volume, then it is considered as a breakout. The below figures shown in the page can explain the breakout theory. In this, the sellers are dominant at certain region and the buyers are dominant at certain region. Finally, the sellers are losers and buyers will move the market up. In the case 2, the sellers and buyers are dominant at their places, but finally the buyers lost momentum and the sellers gained it, so the breakout is below the support line. Now let us see how to trade a breakout. First, confirm the breakout, the two in the multi-time frame analysis. Multi-time frame analysis are done by swing trades or even in intraday trades, which is useful in taking trades which are more reliable. Make sure the volume of the breakout is huge or the volume should be decent. That means the volume should be higher than the average and the sellers should be very low and buyers should be high at the breakout, and vice versa in breakdown regions. For swing trades and long positions, the delivery percentage should be noted before taking trades and check the breakout using RSI. The RSI should be above 50 in the case of long position at swing trades. If the RSI returns from 20 levels to 30 and above levels, it may be considered as a buy. Now let us see how the trend line breakout takes place in this slide. In the chart, the price broke a huge consolidation and formed a huge candle above its resistance area. This shows how the trend line should be broken on the breakout time. In breakout, volume is the most important thing to be considered. The volume should be huge or quite decent, which means the volume should be above the average level. In this chart below, the volume is quite huge and the candle is also huge, so it is considered as a good breakout. The other thing to be considered before entering a trade at breakout, sellers at breakout, there should be a least amount of sellers or there should be no sellers at the time of breakout. No seller breakout is considered as the most powerful breakout to take long positions. Sellers should be less than 1/3 of the buyers. These are the three things to be considered before taking a breakout trade. Some of the false trade examples are given in the slides. In this slide, the buyers are not so dominant. The sellers are quite dominant because At the breakout candle, the sellers are more than 1/3 of the buyers. This shows the sellers are quite weak, and this is considered as some of the small example of false breakout. In this slide, the sellers are not so much dominant, but the buying volume is very low. That means the less sellers but below average volume, so breakout failed to sustain. The volume is also a biggest factor to be considered before entering into a trade. After these three criteria, use RSI and delivery percentage for swing trades or breakout trades before entering into a long positions. Finally, thanks for spending your time in our channel to learn how to trade breakout. If you like the video, hit like button and subscribe to our channel to get instant notifications. Thank you.